General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. 1% a day keeps the stagnation away. Let's do this. Page. It's Friday, January 17th, 2025. What happened today? Let me see. So this target missed. I want the price to go down here. Target missed. Let's go to the weekly. Interesting enough, the low of the week was reached on Monday. And we closed above that previous week's body. But it's okay. That's the end of that quarter. Let me make this lighter or something so I can see the wicks of the candles. That'll work. Okay, yeah, I can see the wick now. I could make the wicks black, but I'll keep it how it is for now. So I think I planned the week out backwards because I wanted it to run this and then go down. We're still under the line in the sand. Okay. No, the low of the week was the key level. And we pushed up, almost took out the high from last week, from previous week. in a range for the most part. Let's go to the daily. This day, let me take this off. Well, I think that was doing a good job of marking out the dealing range. Basically, this is previous week's range. We came all the way up to premium. We swept previous week's low, came under here. We even gapped up. That gap, take note, that gap was serious. This gap right here. Remember yesterday, we respected 50% of Friday, Thursday, Wednesday CPI candle, and respected the old daily fair value gap level without bodies closing it, without bodies closing inside it. Today was a bullish day. Completely one-sided. Catalyst could be TSM earnings. Yeah, because it was just building permits today. Let's go to H4. H4. Everything OTE got smacked. I was trying to do this. This is the 4-hour gap. It's not the daily. And we did come sweep this low, create an order block, closed above it. We never came back to it. It's a key level from a different time frame. It's Asia loss. Thanks for that this morning. We came back to 50% of this. This is where those, I feel like the stop orders were there. That's why I said stops. I thought we would reach here first and then go, but we did the inverse, took the low, then took the high. No, we came to the stop run area mapped out. At the beginning of the week. Also know the respect of the FEG on the H4. Also know OTE was hit yesterday and gave that rundown. But bullish arrays came in and reaccumulated. close, and fair value. Let's go back to H1. Feel like it's missing one today. Back to here. So we was working with that gap. What's the difference between this? Yeah, because this opened here, but it closed here. So this is the gap. Closed here, open here. This is that gap. It came down, boom. It's a gap here. We closed above, then reaccumulated in. Closed, came back, wick, respected it. I'll keep that white, then just make that black. So order flow for the day closed here. Use this as an inverse level to go higher. Okay. No, London started the move. Using AO fair value gap as support. Then we started breaking highs. All right, that's that on that. Y'all have a good day. Peace.